Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have another amazing guest. I'm looking forward to this interview. We've got some really cool topics. You don't want to miss it. And my guest today is Rennick Palley, who is the managing partner or co-founder, he'll correct me, of Stratos. Rennick, welcome.
Thanks for having me. Yeah, I'm the founding partner at Stratos. I founded it in 2016.
Awesome. So I want to find out about more about that. So let's first to find out about your background, and is it a logical background for what you're doing now?
I think so. I think there was a time when pretty much there wasn't any sort of typical background for crypto. It was just such a new industry that people were coming from all over the place. But my background is in educational background is in engineering, applied math, and financial math, and financial engineering, and worked at a hedge fund before getting into crypto. Was doing research and stumbled upon Ethereum in 2015. And that's what really kind of opened my eyes to what was possible. Before that, I was familiar with Bitcoin and thought it was interesting, but it hadn't really clicked for me that Bitcoin could also be sort of the hedge against money printing. Or I didn't expect the world to catch on so quickly to what Bitcoin could be. So I wasn't as interested in it as Ethereum at the time, although now, I have my days where I feel like I'm a Bitcoin maxi, but we can talk about that more later.
I'm interested to talk about that. Actually, I wanted to find out, what Stratos is all about, including your mandate and your thesis.
Yeah, so we have three funds. Two are early stage venture funds. So we invest in pre-seed and seed crypto projects. We typically will lead rounds at the earliest stages. And we have a liquid hedge fund, which owns everything from majors, Bitcoin, ETH, Sol, to memes. So we are active across the liquid token space in the hedge fund.
So you invest in ETH, you invest in Solana, and you just said you might consider yourself a Bitcoin maxi. None of those are related to Bitcoin. So where's
Right.
the correlation?
Well, when I say I'm a Bitcoin maxi, it's more of a joke. I mean, obviously we have significant holdings and things that aren't Bitcoin, but I think that there's something really appealing to the elegance of Bitcoin in that it's very, very simple and it's more or less ossified into what it's going to be. And it is able to execute on its intent very precisely because of that elegance. Whereas a lot of the rest of crypto, people can argue that product market fit is not really there. There's 5,000 on-chain users around the world. The rest of it is bots. We don't actually have real product market fit in a lot of crypto. People will argue that. I don't agree with it. But on days where I'm feeling like, you know, I just want something that works and is simple, that's when I feel like I'm a Bitcoin maxi.
I I might be the same as you. There's a lot of complexities now that keep expanding like infinitely. You let's talk about your liquid token fund though. You recently did a 300x on dog with hat, right? Um, what's driving that velocity in the meme coin area where nothing else has velocity right now?
Yeah, I mean, I think memes have kind of fallen off with the rest of alts, although they seem as, in the last week to really have recovered pretty strongly and showing a lot of relative strength coming off the bottom. But I think generally speaking, people are interested in memes because it's a great way to get exposure to the crypto space without necessarily having to invest in something that has significant token unlock overhangs. The high FDV, low float meme that people seem to be very negative on right now. And so memes are not dissimilar to Bitcoin, what we were just talking about, very simple in what they purport to be. They're really just intended to be a measure of a community. They're a monetary asset. They have no underlying cash flow, no underlying product. They're not intended to have those things. And as a result, they have theoretically uncapped upside. And so for someone who's interested in taking as much risk as possible in crypto, they're the best game in town.
So it's like playing a lotto, the Powerball.
Essentially, I mean, I think the expected return is better than gambling or the lottery. So, I think there is a rational reason to be involved in memes rather than, you know, just pure gambling.
Right? Because I want to talk about that. Like some of the coins that people thought were going to have the most adoption because they have the most utility have really nosedive. And I don't know the reason for that, right? While the meme coins, have done quite well. And you said a word there I heard twice this past week that I hadn't heard before in a while, and that's ossification, right? Are we seeing ossification not just in the token prices, but in the utility of some of these popular major alts right now?
Well, I think if you segment the alt space into different subcategories, you can start to be more precise about what you mean by that. And I think if you look at some of the, let's call them OG blue chip DeFi protocols, there has been some ossification, but that's sort of by design. I mean, I think the idea is that a protocol, there's this philosophy around protocol governance, which is that the best governance is not having or requiring governance at all, because the protocol is functioning as a protocol and not a live sort of changing environment. And so I think a lot of DeFi protocols have taken that approach. Others are much more active in terms of changing themselves. A good example is Maker. Um, but I think we have to separate the idea of utility for an application and the utility token that's tied to it. In my view, the term utility token is a meme. It's a psyop that was created years ago in 2020 during DeFi summer when dApps wanted to issue a governance token or a utility token that was intended to not be a security. And so it had to have some reason to exist. And so that name was attached to it. And so I think the market is just becoming increasingly dissatisfied with the idea that there's no value accrual to these utility tokens. And that's why they have, by and large, not performed well.
Could there be in the future? Part of it was maybe the ossification utility. Part of it was because we have had a pretty bad macroeconomic environment, right? How can people tell the difference between if something's macro driven or if it's or if it's utility driven or in quotations driven? How can you tell?
Well, I think it's hard to disintermediate these things. So I think that if you look at the majors, for example, recently they've performed fairly well. They've had strong price floors that they've tested and bounced from multiple times, whereas alts, by and large, have not. They've a lot of them have just been down and to the right for the last few months. Now, I think if you look at the broader macro environment, the macro situation in aggregate is actually not bad. We have high inflation that's come down, which is bullish. I'm expecting to see inflation come down even more over the next 6 months. And you have a government spending trillions of dollars in deficit while we're not in a recession. It's literally very unlikely to have a recession in the US when the government is spending so much extra money. They're literally adding 7% of GDP in spending. So the idea that we're in a bad macro environment I don't necessarily agree with. Um, but in order for crypto to really do well, you have to have additional money printing, and that happens in more of like a lumpy way. And so I'm expecting to see more money printing this year, and as a result, the majors as well as the alts in particular to really benefit from that.
And with that, the memes should benefit as well, right?
Yeah, I think that memes are likely to outperform pretty much everything else in the space as a result. So if obviously they're subject to potentially more volatility, because again, there's not any cash flows for them to be anchored to. But at the same time, there's no limit to the upside. Plus, there's no additional token unlocks in the future that are going to dilute the token today.
That's true. That's true. There are some substantial unlocks. So the interesting thing I found out about memes recently was that it's not just in crypto, right? It's in the stock market too. And there was a big announcement and then surprise that Roaring Kitty has returned to talk about GameStop. And then GameStop exploded again. So, my question here is, and I don't understand this term too much, is regarding financial nihilism. So, what is financial nihilism, and why was there a recent explosion in it?
Yeah, so those are really two different topics. I'll talk about Roaring Kitty first. So I think and look, GME GameStop is really like the meme stock that he kind of circles around. Look, at the end of the day, every meme is just a community. There's a community around WIF, there's a community around Bonk, there's a community around Pepe, there's a community around GameStop. And so it just so happens that Roaring Kitty is kind of like the Pied Piper of that particular community. And when he came back onto the scene, it drove people to re-engage with the stock. So they're just different mediums for expressing the same sort of cultural community phenomenon that are memes, whether it's a crypto meme or a stock meme, it's the same thing as far as I'm concerned. And then to answer your question about financial nihilism, I think it's a really unfortunate byproduct of many decades of financial and political policy in the US. And that's more or less been exported to other developed nations as well over that time period. And it's essentially the scenario where boomers have benefited disproportionately from money printing and asset price increases over the last few decades. And what that means is people of younger generations, whether it's millennials or Zoomers, basically can't afford to buy those assets from the boomers. Because that when you think about real estate, for example, when you're buying a piece of real estate, you're buying it from someone else. You're not buying a brand new piece of real estate. The land is there. Someone else owned it. You might be buying a new building on top of it. But essentially, you have to buy it from the guy who owned it before you. And if the value has been inflated to the point where the new guy can't afford it, the new generation of people can't afford to buy it from the old generation, then they basically lose hope. And that's financial nihilism. That's basically saying, look, no matter what I do, I'm saving a couple hundred to $1,000 a month at best. There's no way I'm going to be able to afford a $50,000 to $100,000 down payment on a home. I'm just never going to get there the normal way, right? I can't just keep putting this money away in the S&P 500, making 7% per year, hoping that I'm going to be able to, have financial freedom at some point. The way that it worked for the older generations is not really the way it's going to work for the current generations. And so they look at that and say, well, what's my alternative? I can go hyper gamble on memes and maybe turn that $1,000 into $100,000 and actually change my life in a few months. So it's, I think, that's probably the best way I can sum it up. I have some thoughts on what the downstream ramifications of that are, but hopefully that's a helpful definition.
I really want to know about those downstream ramifications because I have some ideas too. And I want to see if we're aligned on that. Money printing did mask the money printing that happened right when COVID happened, masked boomers' inability to leave their companies, and it gave them money. And so instead of exposing their failures, it bailed them out. It was the second time they got bailed out. 2008, 2020. So I'm really interested to find out what you think the downstream effects are.
Yeah, and I think it's on the corporate level, but it's also just every person who owns assets, whether they own stocks or they own real estate, benefited from the money printing. Because when you print dollars versus a scarce asset, the scarce asset is going to increase in dollar terms, even if there is no actual earnings power increase associated with it. It's the same thing, same reason why we've seen Bitcoin perform so well over the last 10 years. It's all the same idea. It's just how do you want to express your view that money is going to keep getting printed? Now, the problem is it's been happening for decades. And so boomers got rich off of it. And so the question is, well, how does this play out? Like, where does this end? What does the future look like? And I think the future basically looks like some form of universal basic income. Because if you think about what's happening now with inflation and money printing, um, there's a subset of the population who it's becoming increasingly difficult to basically afford everyday life, and they're getting squeezed. And what's going to happen eventually is the price of oil and housing and car insurance and the cell phone and groceries are just going to be too much for the average person to afford. And historically, what people have done to solve that problem is increase the minimum wage. But at the same time, what companies are now doing is they're replacing labor with robots and AI and the like, and they're only going to increasingly do that. And so you'll have a large percentage of the population that's either unemployed, underemployed, or not able to make ends meet, even though they're fully employed. And so that subset of the population is going to need basically some form of government subsidy. So it's just a continuation of the trend line that we're on. If you just roll it forward a couple of decades, that's where we wind up. And what does that mean? It just means more money printing. The dollar is just going to get further debased. In addition to the 35 trillion of debt we have, the 2 trillion of spending that the federal government is making this year, deficit spending. And then, arguably there's another $100 trillion of unfunded long-term liabilities that the government has through like Medicare, Medicaid, and Social Security. So in my mind, all these things are a foregone conclusion. It's just a matter of waiting for them to play out.
I like the word subset. Actually, I think the wealthy subset is going to be minimal, and everybody else is going to be in that UBI, right? Where like, how do you see the future in that case? How do you see the future? It's looking pretty bleak, right? What's our way out?
Yeah. Look, I think one of the beautiful things about crypto is it's a non-government controlled asset that is liquid, tradable 24/7. This is the first time in the history of humanity, arguably, that there's been an asset that is fungible and liquid that a government doesn't control. So I think people will increasingly opt out of the traditional financial system and opt into crypto. And so hopefully that's, a way to potentially save this. I mean, I think the brilliance of Satoshi and launching Bitcoin in January of 2009 and directly referencing government bailouts of banks is basically the idea that, he was kind of tipping his hat to the idea that if you if you give people an alternative to government money, it will slowly but surely remove the power that the governments currently have to indirectly tax people through money printing. So I view crypto as actually a very important social construct for the future of, the global economy. And I think we're already seeing people's willingness to shift which currencies they transact in and store value in. And a lot of that's happening today via stable coins, where people in emerging markets, especially countries that don't have strong currencies or have hyperinflation, these people are using their smartphones and getting their money out of their local currency and getting it into stable coins, which, today are dollars. And obviously everything we've just been talking about is why dollars are trash, but dollars are better than pretty much every other currency in the world. But eventually those same people will catch on to Bitcoin and other cryptos and want to own those instead.
Yeah, I've always thought that those stable coins should be. I mean, Bitcoin shouldn't be stable, but it shouldn't be stable coins. It should be Bitcoin. Um, you know, because what are the right now? You have two types of stable coins, right? You have pegged to the dollar, and you have algorithmic. And algorithmics failed in the short term, and the dollar's going to fail in the long term. So, you know, aren't the stable coins more risky than Bitcoin or even memes?
Yeah, I mean, I think algorithmic stable coins, they come in different forms. I'm not going to argue which ones are going to fail and which ones aren't, because that's kind of a different rabbit hole to go down. But I think if you look at, you know, Bitcoin until today has been highly volatile, and that's why people haven't chosen to hold it as a store of value instead of dollars. But I think over time, as Bitcoin matures and the holder base distributes, it will become less volatile and it will become more appealing as an alternative to dollars. But yeah, you're basically playing a game of, whack-a-mole, and where on the one hand you could hold dollars and they're quote unquote stable, but you're losing 7 to 10% per year of your purchasing power. Or you can hold Bitcoin, which is appreciating in dollar terms, but has 100% annualized volatility. But the reality is any form of investing is fraught with risk. You're always dealing with risk, even if you buy the S&P 500. Are you buying the top? If you buy Apple, are you buying the top? Are they suddenly going to lose their market share in smartphones and services? So everywhere you look, there's going to be risk. You always have to make those trade-offs. So I don't think trying to escape fiat is any different.
That makes sense. So I have one more question on the memes. And I'm kind of not understanding how this kind of works right now, but there's been thousands and thousands and thousands of memes that have been printed on Solana, right? And I understand it's stress testing this a lot of network, but I would think that some of the value accrual should go into Sol, and not, and I don't see a correlation between the thriving meme market and the price of Solana right now. Um, should there be a correlation? How does that work? Should I look at it differently?
Well, I think it depends on your time horizon. Less than a year ago, Sol was under $20. So from that perspective, and when you look at the aggregate market cap growth of Sol, which is probably 40 billion plus, that's huge value accrual. If you were to sum up the value of all the memes on Solana, I don't think they're worth 40 billion. So in that sense, Solana has benefited disproportionately from the value creation of memes. And if you look at where Solana is trading today, it's actually, as of the end of Q2, trading at the lowest price to income ratio it's ever traded at, meaning that the fees relative to the market cap are higher than they've ever been. So from that perspective, I'm very bullish on Solana from here. And look, they generated almost $1 billion annualized in fees in Q2. So people are paying to use Solana for memes. And it's just a classic platform play. You want to own the platform, not the individual assets on top of it.
Got it. Got it. Okay, thank you. So I want to have I have a couple further questions. One is, I want to ask you about trends that you see. From a VC perspective, what are the trends on the horizon for this year and into next year, in the crypto blockchain space, especially with the upcoming election?
Yeah, I mean, Bitcoin infrastructure innovation has been an area of interest. I'm disappointed in most of the Bitcoin L2s because they don't actually inherit the security guarantees of Bitcoin. So, they're not actual L2s in my opinion, but interesting to see people doing things in Bitcoin. I think looking at some of the, other infrastructure advances like L2s and modular, it's really interesting to see those things starting to pop up at scale. We had the view that years ago that we would eventually have thousands, if not tens of thousands of execution layers and rollups. So I think we're going to get there. And so it creates a very fertile ground for new applications and new user experiences. I think that crypto social has a lot of potential just because we're starting to figure out how to combine the financial incentives of crypto with a vastly improved user experience to make it actually competitive with Web 2. So when you combine those two things, I think, before we know it, we're going to see a pretty big use case on the social side. I think DPIN is interesting. Um, Again, same kind of story. The UX gets better, the infrastructure is better so that it's cheaper and faster and more competitive with the existing networks. Um, and yeah, I'm excited to see where the infrastructure works and doesn't work because I think after this cycle or over the next 18 months we're going to see what else needs to be built as a response to the infrastructure that's in place today.
And regarding, and I don't know if you had the chance to go to Consensus this year.
Mm-hmm.
What I found interesting was I attended a couple um, panels on VC and AI, right? And no one had a uniform answer on where they see the intersection of blockchain and AI, and people were confused. How do you think that's going to work? Do you think we're going to see an AI year, or is there still uncertainty there?
I think it's going to take a while for AI and crypto to play out. It's very early days today in terms of seeing AI and crypto interact. The idea of having a distributed GPU network seems like it makes sense, but that's the question there always is, can something like that compete from a latency and cost perspective with something centralized like Web 2? Eventually, probably yes, but it's going to take a long time. Then you have the question of, well, where do you train your models? Again, same kind of questions, latency and cost. Then the question is, well, then where do you do your inference once you have the models? Could that happen on chain? That's a lot less data intensive, data and compute intensive. Maybe where do you actually store the models? I think storing the models on chain makes a lot of sense because it makes it open source, immutable, tamper proof, etc., so that exactly how the model is functioning and what the inputs are to the model so that you can ensure that it's not being censored or altered or tampered with in some way when you're using the LLM for something that's mission critical. Um, I think another area where blockchain and AI make sense or just allowing or finding some way to identify agents. So over time, every human will have hundreds of agents working on their behalf, but there'll be thousands of and millions of other agents that are kind of functioning like bots that just operate on their own behalf and maybe were released by someone nefarious. How do you prove which bots or agents are functioning and acting on behalf of a real life human versus how do you disprove that one is false or operating under a false identity? Well, being able to put that identity on chain makes sense. Same thing with just identifying content creators. If you want to post a photo of yourself and you're The Rock or, Taylor Swift or whatever, how do you prove that these things are not deep fakes? And how do you prove it's actually you, especially if you're making money promoting a product, right? So all of these things, I think there's two choices. Either you put these things on chain or you trust Facebook, Amazon, Google to do it for you. And I think a lot of people are going to increasingly distrust these large centralized companies and look to put things on chain, especially once it gets easier to use.
Don't get me started on Facebook. um, I just recently got my trademark crypto hipster approved by the USPTO, but for 2 years I was getting messages left and right from from something on Facebook telling me that I was violating trademark laws because I should not be using crypto hipster on there anymore. But no one other than me has the trademark now, so I guess they're in trouble when they do that next time. So, yeah,
So
yeah, looking forward to it. So I want to thank you very much for speaking with me today. I have one last question. It's really simple. I really enjoy speaking with you, and yeah, how can people find out more information about you, about Stratos, follow what you guys are up to? How can they do that?
yeah, we have a website, stratos.xyz. You can find our blog on that website, where we do more in-depth research pieces. So feel free to check that out. You can also see our portfolio company list, and you can follow me on Twitter at Rennick Palley, one word. And yeah, look forward to engaging with you guys in the DMs.
Awesome. Thank you very much for your time today.
Thank you.